Hey there, welcome back everyone, and I appreciate you stopping in if this is your first time visiting the channel. The videos you're going to find here are related to mortgages, home finance, saving money at home, real estate, buying and selling, all kinds of things related to that. You're not going to hear, stock market investment tips or stock tips, those kinds of things. I'm not going to get into that. It's quite honestly not my forte. If you want to know what stocks to pick, uh, don't pick what I pick unless you want to lose money. But the rest of the stuff I'm going to be able to help you with. If any of that interests you, then go right ahead and hit that subscribe button and bell notification icon so you know when I upload a new video. This particular video is about asset depletion loans or asset-based mortgages, and I'm going to explain to you who they're for, when you might need it, and how it works. So uh, usually when someone needs this type of a mortgage, it's because they have a high amount of liquid assets, but they have no verifiable incoming revenue streams. So they don't have a job, they don't have anything that's delivering a monthly income that they can verify. Um, what in this case, the lender would use your liquid assets as a basis for justifying giving you the loan, because they figure, hey, you know what, you have all this money here, and therefore there's a likelihood you'll be able to repay the loan. And each lender has a different type of a formula, but even though I say each lender, not many lenders offer these type of loan programs, so it's not as easy to find as you might think. Also, the thing is people don't realize that these even exist. So a loan officer should be asking you all kinds of questions about your situation and understand what you might be able to have to offer, and hopefully they have this type of a loan program available to you. If not, you can leave a comment down below or follow the link that I might link to below that'll take you to one of my articles about this type of loan program, where I can help you get matched up with a lender who absolutely does offer this type of loan program. All right. So again, I mentioned that this type of loan is for someone that needs to be able to qualify using assets, liquid assets. So liquid assets are not your BMW, the real estate that you own. Your coin collection might. I shouldn't say that. Maybe that's liquid actually. Your guitar collection, your autograph collection, that doesn't work. And in some instances, your retirement fund might not qualify. You have to check with the lender, because each lender uses. You might have to be above a certain age before you can use those funds. So, of course, savings and checking, the big thing, that primarily is what lenders will look at to determine whether what your liquid assets are all about. So. Again, liquid assets, each lender will have a different list of liquid assets that qualify, or assets that qualify as liquid to them. But typically, the way it will work is, let's say you have $600,000 in liquid assets. I'm really giving a high amount. Hopefully, most of you that are watching this video are not thinking to yourselves, hey Eric, how many people have 600,000? I'm using this number because it's divisible easily, and you'll see what I mean. So most lenders will use a number that's divisible by 60, right? So $600,000, the lender will divide that by 60. You end up with $10,000. Okay, so $10,000 is the monthly gross income that the lender will use on your loan application. Okay, so they're going to say, okay, that formula works out to $10,000 per month, and then that $10,000 per month is the income used during the DTI calculation. So your proposed mortgage payment, taxes, insurance, principal, interest, and any other debt that might show up in your credit report, car payments, minimum payments on credit cards, student loans, things like that. All of that will be calculated into your DTI, right? And your I, income, being that 10,000 I talked about. So whatever your number is, you divide by 60, right? So if you have, $100,000, you're going to divide that by 60, and you're going to have a very small monthly income that you're going to use to qualify with. So this is why this loan program is typically for people that have a high amount of liquid assets, which is why I jumped right away to the 600,000. I'm doing this video because I spoke to someone this morning who had over $1 million in liquid, and so he was looking to purchase a home for 600,000 and was able to qualify because of that. So, but here is the other way that this works. I have a lender that's got a really cool program, and it's basically an asset, a different way to calculate it. Essentially, if you have 600, let's go back to that 600,000 number again. If you have 600,000 in liquid assets, and you want to borrow $600,000, and you don't have any other debt, you can borrow $600,000. So what they do is they take the total amount of liquid assets, subtract any debt you might have. Let's say you've got $20,000 left on your car payment, and you might have a home equity line of credit on another property for $50,000, right? So that's $70,000 together. 600 minus 70, $530,000 is what's left. So you can get a mortgage for $530,000. That was really a real easy way to look at it, and I think I like that one a lot better. You can qualify for a larger mortgage amount too using that scenario. So if you're in a situation where you need to qualify using assets, just think about that. Total liquid assets, subtract the debt that you might have, and then what's left, that's the loan amount you can qualify for. Credit scores. You're going to likely need a credit score of at least 600 and at least a down payment of at least 25%. And now, that's as I record this today. These guidelines likely change. Well, they will no doubt change again soon. So I'll keep updates down in the video comments below, maybe in the first comment pin, and we'll keep that updated. If you have any other questions about this type of a program, just leave them in the comments below. I'll respond. I appreciate you watching. I hope you can subscribe to the channel for more. Thanks again for watching, and I'll see you on the next one.